Are you overtrading, and does this common fix work? Hi, it's Charlie giving you today's video. So let's move the dollar index aside here. So, right. Okay, so there's two sides to this overtrading. We're going to look at from an intraday perspective, but we're also going to look at it from a swing trading perspective because swing traders can overtrade too. So let's first of all look at the common fixes with intraday trading. So what would be some common fixes when people hear, oh yeah, you're overtrading, oh yeah, you just need to do this. So a common one is to have a 3-strike rule, let's say. Now, for some people it might say, oh, it's 2 strikes or whatever. Some people it might actually be 1-strike rule. Now, this on paper seems like quite a rational idea, and even I would recommend this to someone who is relatively new to trading, who wants to day trade. Then yes, something like a 2 or a 3-strike rule, I would say actually is good because it at least tries to instill some sort of discipline. Okay, so I would recommend that, but there are issues with this. So, but certainly for a newer trader, I would actually say, yeah, try and implement that. Really, more so just to get them into the habit of good discipline. However, there are some issues. One is that if you impose like a 2-strike rule, 3-strike rule, you have 2 losing trades, and it so often is the case, your 3rd trade of the day or your 4th trade is the big winner, but you've missed out because you've imposed a strike rule. The end of the day, if you've got an approach to the market and it delivers a new setup, then you should take it, whether you've just had 2 losers or 3 losers before that. So now, coming back to what I'm saying about newer traders, the risk is that they have 2 or 3 losers and then they start properly revenge trading, and that's why that can be good for them. However, again, just saying I'm going to have a 2 or 3-strike rule doesn't mean to say that someone's actually going to do it. And the more often, over the years and years that I've dealt with traders, is that they may well have this rule, but they still end up breaking the rule because they get tempted in and then away they go. So does it actually work having this? For some people it will. They've got the discipline to say, right, okay, I've had 2 losers, I'm done for the day and I'll come back to it tomorrow. But for others, it's not necessarily going to be enough. So how do they deal with that? Yes, you still need to have that written in your plan, have it on post-it notes in front of your computer, whatever it might be, to help you, to remind you, oh, no, I've hit my levels, 2 or 3 strikes. However, what about those numerous numbers of people who in the moment will get caught up in it and then they'll just trade again and trade again, and by the end of the day they've taken 15 trades? How do we stop that? That's where psychology, as always, comes in, and they've got to use self-talk. They've got to talk to themselves. Self-talk in trading is so important. Scientists or psychologists have proven that when you talk out loud about a subject versus just internal dialogue, you fire different neural pathways. So if you talk out loud about it, you're more likely to enforce whatever it is, the language that you're using. I can't take this next trade because I would then be going into potentially overtrading, and if I take this next trade and that becomes a loser, I might then want to be looking for another one and another one and another one. And what if I take this next trade and it becomes a loser? Oh God, how much would I then be down for the day? Start using that type of language, but talking out loud. That is going to save a lot of traders. It's creating a habit of talking out loud, which most people aren't used to. So they have an internal dialogue. The internal dialogue just disappears, and before they know it, they've taken another trade and another trade. So one other thing with intraday trading is that you get a lot of people say, oh, just turn your screens off. turn off your screens. And this is where I think a lot of the advice out there is coming from people who are not actually traders, not genuine traders, because it's all, again, on paper, all this stuff makes sense. Yeah. Turn off your screens. Walk away from your, once you've had your 2 losers or whatever, just turn your screens off. Do you really think that that person who's had 2 losers is going to find it that easy to just turn their screens off and walk away from it? No, of course they're not. So again, that's the sort of basic advice that you hear from people who really aren't really at the coalface of trading. So, although turning your screens off, again, much like a 3-strike rule or whatever, is still makes sense, you've got to reinforce that. So you reinforce it with the self-talk and the self-language to say, I've got to turn my screens off right now, and I'm going to walk away, and I'm going to do this, and this. And the reasons I'm going to do this, and the reasons I'm not going to come back to this, no matter what the market does for the rest of the day, it may well deliver some, other setups for me, but the risk is if it doesn't, and this is always the statement, I'm going to come to this statement in a minute. What if it doesn't? And what if my 3 losers become 9? That's the risk. It's not about, well, what if I miss out and there's some nice trades? It's about installing the discipline for someone to really start to understand what is revenge trading versus what is just taking another quality setup. So if you're in that modality of potentially revenge trading, then you have to walk away from it and say to yourself, look, although I could make money, although I could make back those losses, what if I didn't? What if I had another 3 losses? Then how am I going to feel? Again, it's that self-talk. And do remember, statement, do remember the old line. Retail traders think about how much money they can make. Professional traders think about how much money they could lose. Remind yourself of that when you're about to take that next trade, when you're in the moment thinking, oh yeah, I've got to take another trade, I've got to try and make back my losses. There's always another day. Now let's move over to swing traders, because swing traders, people assume that revenge trading is more for intraday. And don't get me wrong, when people are caught up in the intraday noise and fluster of the day, it's very tempting to overtrade and revenge trade. But swing traders can overtrade as well. It's just on a higher time frame. So how can they overtrade? So they could be too tempted to be in different positions all over the place. So one of the things they've got to consider is correlations. Are they overexposed by being in, for example, and I'm going to make this very crude, long euro dollar and long pound dollar? Overexposed essentially against the dollar. Now don't get me wrong, there's nothing wrong with being long on both markets, because they'll still move slightly differently to one another, but just be aware of your overall risk. So if you're going to be in correlated assets, just reduce your position size per trade. So you've got to look at your overall risk. And so from a swing trading perspective, swing traders may not be caught up in, like I've said, all that noise that an intraday trader may get caught up into, but they may still unwittingly find themselves, oh, there's a nice setup on euro dollar, there's a nice setup on the pound dollar, oh, I'm also going to be long the S&P. Essentially they're finding a load of markets which are highly correlated, more often than not. And so they've got to look at whether they are overexposed. So swing trading can be different, but don't get me wrong, swing traders can still want to revenge trade as well. And that always comes back down to the dialogue. The self-talk is still important for swing traders as well. Absolutely. But more often than not, for swing traders, it's about making sure you may have loads of signals coming through, but look at your overall risk. And again, from a dialogue perspective, would I be comfortable if these 7 open positions that I've got on lovely swing trades all rolled over and stopped me out? So that's the sort of dialogue to use there. And I've already realised we are 10 minutes in today. So there you go, some thoughts on overtrading today and some fixes in relation to that. Most of it always comes back down to your mindset and using mindset tricks to try and act as arresting mechanisms to stop you from doing the things that the market itself, which is the devil itself, are trying to get you to do. Hopefully that's given you some food for thought there today. I'll be back next week.